Labour's in power, taxation is on the rise, and there is negative sentiment all around at the moment. Hey guys, it's Shiv Haria here from Lifestyle Property People, and I wanted to give you a quick market update. Now, what I want to do today is let's get truly into what's going on in the property market, and more importantly, what does it mean for people looking to invest over the next 6 months. Okay, so the first thing is that, of course, we know that Labour is in power. And what does that mean? That means that they're going to be focused less on business and investing and more on the redistribution of income and government intervention. But the summary is that property is a long-term game. And actually, this government's not going to last forever. They might be here for 5 years or 10 years, but eventually they are also going to move on. We go from left to right and then back to left again and then back to right again. That's just the way that politics works in our country. The second point is, where else are you going to put your money? Some people have said that, well, actually, it's not going to be as much of a friendly environment for investing. And of course, that's probably true. However, what else can you do? Are you just going to hold your breath or put your money under your mattress? You've got to invest somewhere. And even if you're going to make slightly less return, you still need to put your money somewhere so that you're making a better return than just doing nothing with it. Actually, what's going to happen is on the 30th of October, we're going to have the autumn budget from the Labour government, and then we're going to know much more about their spending and taxation plans as a result of that. And there are two things really that could impact the property market. The first is the rental reform bill, and that basically is a bill that aims to provide a fairer letting system for landlords and tenants. And that's causing a little bit of apprehension in the market right now because ultimately it's going to make it more difficult for landlords to evict their tenants, and of course they're going to also have to give them a little bit more notice. However, all that really means for us is that we're going to look to vet our tenants better. The main people that this is going to affect is people that are looking for short-term rental strategies, and we're not. We're looking to put a tenant in there, vet the tenant well, put the tenant in the property, let them stay for a 5-year period or something like that, and then we then renew onto another tenant. So because we are looking for long-term tenants, we just need to make sure that our vetting process is very, very secure so that we get the best possible tenants in. The second thing that's going to come through is the potential increase in the capital gains tax rate from 18 to 20% for lower rate taxpayers, or from 28 to 40% or 45%, depending on whether you're a higher rate taxpayer or an additional rate taxpayer. And what's that doing? That's basically bringing the capital gains tax rate in line with income tax. Now, while some older landlords who are already considering exiting the market over the next 5 years or so, they might consider selling sooner to avoid the tax hikes, but most investors who invest in property are actually investing for the long term, and they're not going to be looking to sell in anytime soon. So you only pay, remember as well, you only pay tax when you make money. So if we're making profit, that's when we're going to be paying the tax. If we've got say a £200,000 increase in the value of our property, so we've made a gain of £200,000, it's only right that we pay some of that as tax to help other people who are not so well off. As well as that, of course, remember, anyone selling is going to be trying to sell quite quickly because these tax changes are probably going to come in quite quickly, I imagine. Probably by the time we get to the 1st of April, that's when they're going to come in. So people are going to be putting their properties on the market between now and April, hoping to sell them very, very quickly, which means that people that are looking to buy properties, there's actually a potential to pick up discounted properties over the next few months. Outside of the government changes, what else has been going on? Well, inflation is now at 2.2%, which is not far off the Bank of England's 2% target. So that means that we are basically where we need to be. And as a result of that, the Bank of England has cut the interest rate, the Bank of England base rate, on the 19th of September from 5.25% to 5%. And actually, on top of that, we're going to expect to see another base rate cut probably before the end of the year from 5%, maybe even to 4.75%. Over the next couple of years, what we can expect is by the end of next year, so by the end of 2025, that base rate is going to come well down back to somewhere between 3.5 and maybe even 3.75%. So as a result of that, mortgage interest rates are going to come down. If mortgage interest rates come down, it means that rental profits increase. And if rental profits increase, it means that the demand for properties is also going to increase. If the demand for anything increases relative to the supply, then that ultimately means that there's going to be price rises on the agenda over the next few months and years. So what you want to do is get in now whilst the prices are still negotiable. As well as that, rents have also been increasing at a record rate over the last year or so. So during 2023, rents were increasing at 10% per annum, and those are still increasing in 2024, but perhaps at a slightly slower rate. And of course, the rate is slower due to the uncertainty with the new government. We just don't know what they're going to do. On the 30th of October, we're going to start to find out. But what we do expect is that rents are going to continue to increase over the next few years, and ultimately that's going to benefit landlords, of course. Ultimately, the market is getting busier because people are now back from their holidays, from their summer vacations, and of course the kids at school. So now we can get into the business of actually, having some time to go and do some of these things. Seasonally adjusted, the transaction numbers are actually 10% higher compared to a year ago. So we're actually in the right ballpark now, and that's only going to continue to increase. Remember that no matter what happens in the market, what happens with government and their policies, they come and they go. But investments in property are for the long term, and actually they have stood the test of time and time again. Don't forget to press the subscribe button for more property information, insights and tips, and I'll see you next time. Bye bye.